Hey guys, welcome to BLONITY. So I want to do another TA video about other indicators and important stuff I think which we should look in the future. Last time I've talked about the sonars. They are very important for us or for me. We have talked about the Heikki Naishi candles on the weekly, which is a very good sign when this turns that it is a trend reversal. Today I want to talk about volume, about ribbons, Fibonacci levels, and the fear and greed. So this is the chart of the Nasdaq ETF, the Invesco Trust, because on the Nasdaq chart I cannot see volume, but on this ETF here I can see volume. And what we see here, this here is the volume we have seen in the March 2020 crash, huge volume. So we had the biggest spike here. So that was the first big panic sell-off. And yeah, maybe a lot of people thought that time, okay, this is now the bottom because there's a lot of volume. But it crashed even further. It had a little bounce and it crashed further. And the volume stayed high for, like weeks until we formed the bottom here. And then the volume moved down and we had a run. Also this time here we had a big crash here, also a lot of volume. We had this time a crash, a lot of volume came in. This time here also volume, and it seems like the bigger the crash, the higher the volume, because more people get liquidated, more people are starting to panic sell, and we see that here also at these levels here. And the biggest one so far was here last week, the big crash here. Because of the Federal Reserve meeting and other things. Also, we have taken out this low here, so we have now formed a lower low, which we haven't seen for a while here. The last time here in the March 2020 crash, but then we started a huge rally to the upside. So what we can see is that volume is very important and plays a big role. And we don't know whether this is the bottom here, that we now make a recovery, or we get another leg down and the volume stays high like in March 2020. So this is something we have to see. But at least we have seen a lot of volume here, which shows us there's a lot of selling, but also a lot of buying. And a lot of volume is always a sign that there will be at some point a bottom. At least in the last few years here, we can see this here. But it can take a while for sure. Okay, so let's go to BTC now. So this is Bitcoin. The question is always, which chart do we use from which exchange? For example, this is Bitstamp, the Bitstamp chart. We can see there's very low volume. So it seems like that no one is using Bitstamp anymore because there is Binance, there's Coinbase, there's FTX, and so I don't think this chart helps. I don't think this is representative. We can go to FTX. Here's the problem with the history. It started really in 2021 and has grown really big, but the history is missing. So what I like is the Coinbase chart here and the Coinbase volume. I think this is most representative. So yeah, let's start here in the bear market of 2017. We were at 6,000 US dollars, and then we got a crash in the stock market. There was also a lot of FUD in crypto. And yeah, then we had a huge drop here and a lot of volume came in. We had this bear market here for months and then we moved up. We had a parabola here in 2019. On this top, we had also a lot of volume. So volume is also a sign of a blow-off top. Also in 2017 here, a huge volume spike. Then the next significant one was here in March 2020. Huge volume here came in like the black swan. Next one was here the correction in January 2021. Many of us will remember this. Huge volume. Then we moved up with price. Volume was decreasing. And yeah, then we had the crash here, the China exodus, Elon Musk, whatever, crash, again with huge volume. It took a while to form the real bottom here. It was this Wyckoff accumulation. But finally we went out and moved higher. So with this run here, we had no real volume here. So that was from the volume side, also a very weak run, you could argue. Also on the top here, there was no real volume, so that was definitely not a blow-off top. Yeah, but in this long-term correction here, we have now since 2 or 3 months, we have seen now at the end here more volume, but it is not as big as these wicks here we have seen here. So this could indicate that there is a final capitulation coming, and we will see, like we have seen on the Nasdaq ETF, for example, a huge wick here where people are finally capitulating. Not saying this has to happen, because this correction is really a long-term correction. This more here was more panic, very strong downwards movement. This time here is a lot slower. So it could mean that people already capitulated here, 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 and here. And that's why we don't get this big spike here anymore. But to form a strong bottom in the past, we have seen huge volume spikes. So until it is unproven, we should expect something like this. So this could indicate that we maybe get another leg down here, and then we get a lot of volume in, and we can finally move up from these regions here. So this is the volume thing I want to show you. Of course, there's nothing for certain. We have seen here volume, but really not that big so far. On the other side, maybe everyone is expecting big volume, and that's why it's not happening this time. This could be also a thing. Another interesting tool, I think, are the EMA ribbons, the exponential moving averages here from 20 to 55 days. And when we go to the daily here, we can see that this band here supports the bull run. So we have, most of the time we have been above this band. We wicked here into the bands and into the last band here, but it provided support, and we always were able. So this time we crashed here through, so that was a big warning sign. We had a complacency bounce, but we made no higher high, and then finally we crashed again through this. And yeah, that was the big capitulation here in summer. Yeah, then we made this Wyckoff accumulation bottom here. The bands were widening, and then they got narrow, and finally we were able to go through it. So that was that time here a big buying signal. It provided us support again. That time we crashed again through this. That was the selling signal here, but then we were able to recover, and we used this band again as support. Yeah, and we had this top here in November, and we crashed through this, and that was also a big selling signal here. So at least at that level here, selling would have been smart. Also when these lines here were crossing, so the yellow crossed the other lines here, so the upper line moved down to be the underline here. And yeah, since then, since the end of November, we have this downtrend here with wide bands. Yeah, and we're waiting for signs for recovery. But what we know from these times here, that these, or from this correction here and from older corrections, we can go back. This provides yeah, some kind of resistance. I will zoom a little bit in. Yeah, so what we need to get back on track, to say, okay, this is a big buying signal. We want to shoot through these lines here, and yeah, bounce above it, hold above it like we did here, and use it as support. So that seems like a strong resistance right now, and I think that's an important indicator too. We should yeah, keep an eye on the EMA ribbons here, because in the past they have provided us yeah, good help here to identify buy and sell signals. I mean, it's always possible that we wick here below, so that could lead to a shakeout. So we have to be also careful. But I mean, if we get something like this here, you're wicking crazy below, yeah, that's then a selling signal. And yeah, I think the ribbons are important. They could help us to don't FOMO in too early, because we're now way below it. maybe it now means that we will bounce to these lines here to the 40,000 or so, 39, 40,000, got rejected like here or here, and we make another leg down. Yeah, so these are the ribbons. I want to show you something else, which is, in my opinion, important. So yeah, the ribbons and the Heikinaishi and of course the sonar, they are for trend reversals to see, okay, when is it likely then we move up again or we move down again, when we can jump in. There are other tools to see, okay, where is likely a bottom. I mean, it makes no sense to call a bottom. We have seen in the past, it failed a lot of times. You could call a bottom here or here or here or now here randomly. But I think what is an interesting tool is the Fibonacci levels, and especially the 61.8 level, which has in the past provided a lot of significance. For example, this 2019 run here, where we had from the lows here of the bear market at 3,000 US dollars to 14,000, we corrected then, and we bounced approximately at the 61.8 level here at this green line, and below the 61.8 to the 65 there is the golden pocket. We cannot see it here. I think there is a tool to show it, but this is the golden pocket, which shows, yeah, this is a good level for a bottom. We bounced from here, of course. Then we had the huge black swan here in March 2020. So let's move on. I mean, it's always randomly a little bit. Where do you start with these levels? But of course, the top here of in April 2021 for Bitcoin, and let's say we started here at 10,000 and we go here. So we can see we corrected here to the 61.8 level and the 65% level here. So we wicked below it and we came into the golden pocket, and that was also the retracement area for Bitcoin. Yeah, I think when we move on here to this top here now, from the start of the bull run, we can now see that we bounced more or less exactly from the 61.8 level here with this correction. But it also shows the last time and also that time here we wicked below the 61.8 level here. So maybe this also suggests that we will get another leg down, maybe one last leg down. Then we get a lot of volume, let's say to the 30,000 or so, a lot of volume jumps in, and then we finally get the V-shaped recovery, like we bounced here or in March 2020 here. And yeah, then we maybe have the power to get through all this resistance, to get the sonar above zero, way above zero, to get the Heikinaishi candle green, the weekly, and to get through these ribbons. And that could trigger the next run. Yeah. So yeah, these are the Fibonacci levels. I think this is also an important tool, but I mean, we have to see what the macro is doing, what the stock market is doing. I think this year is important now. I mean, on Friday we've seen here a little recovery here, and we are now exactly at this resistance level here on the Nasdaq. We can see it here, this bounce, and yeah, we closed a little bit above it. So that's maybe a good sign, but as I'm aware of, this was mostly due to a good Apple performance of the Apple stock, because the stock is so big, the market capitalization, that it was able to help the whole market. So yeah, I think the macro is important, but also it drags you down, and you think, yeah, we'll go to zero, which is also not the case. So we have to stay rational. We have to check the technicals. Another indicator is the fear and greed index. I'm not 100% sure about it, but it also shows that we're closer to the bottom than something else. when we are at 10, this is always a level of extreme fear, and we have been there 2 times here, and we're now moving up. I mean, it's a lagging indicator. Of course, on Friday, prices have gone up for the stocks and for Bitcoin and so on. So then the fear is less, and that's why we're moving up. So what we also can see, we have these fake outs here to the upside and to move down again. We have also seen this. But this pattern looks this pattern here looks a little bit similar than the pattern here in summer. We had here down to the 10s, then this fake out, down here, down, and then finally the move up. So we were down not at 10, but also at 15 or so, fake out here, and then again down. So maybe we have get another fake out here, another down, and then move up again, or we move directly up, or we stay down. I don't know, but of course the fear and greed index shows us that we are at very low levels, and in the past it showed us that the bottom was close. On the long term, we can see here in 2019, yeah, we have wicked a little bit below 10. Here on March 2020, we wicked a little bit below 10 here on the fear and greed. But yeah, since then in this bull market 10, and before also 10, yeah, it started in 2018. Also in the big bear market here in 2018, we haven't gone way below 10. So 10 is a very low level here in fear and greed. Yeah, I think this is important too. Okay, so yeah, we don't want to have like 20 different indicators for sure. For trading, the sonar is gonna be the leading indicator, of course. And yeah, to support this, we use the ribbons, or I use this, and the weekly Heikin Aishi candle to be safe, to see, okay, this is now a trend reversal. Yeah, I think I want to show you something else about the ribbons. When we're talking about bottoms, let's go to the weekly here. This is the Nasdaq QQQ ETF again. So these are the weekly ribbons. So we have in the past wicked below it. In 2019, we have been there for a few weeks, and then we recovered on a V-shaped recovery in March 2020, like 4 or 5 weeks below, and then we recovered. Yeah, and this time we have also wicked below it. We're now, yeah, at the lowest line here, exactly, more or less. So we have to see, can we recover here from here, or do we go lower? So yeah, this has to be seen. When we go to Bitcoin on the weekly, we are now way below this these ribbons. So yeah, I mean, in summer we have been above these levels. We wicked below, but this time we're way below. And when we go back here to this time, I think we need the Bitstamp chart for this, because we need a little bit longer history. When we go to the bear market, yeah, I mean, we wicked down here below this in 2018, and it provided resistance here, and then we had this huge sell-off to the bottom, and then yeah, we moved up again and recovered from this. So yeah, some people would say, okay, we are already in the bear market, we are below these ribbons here, we haven't recovered. So yeah, let's go to the monthly. So right now the monthly here provides some support, so this level here. Yeah, I want to show you the bear market here. On the bear market in 2018, so the lowest line here was more or less at the bottom. So where would this be right now? That would be at 22,000 right now, or 20,000 at these levels here. And yeah, so far this line here is still moving up. So if we get now like a bear market and we go lower here, which of course I hope not, and I think this has to be seen, because we have a lot better fundamentals than at that time. But we know everything is possible in this world right now. Yeah, I think the 20, this is the 55 EMA here. I think these levels here are yeah, maybe a potential bottom then. Could be, if this is now a bear market. I don't see right now a 85% drop in Bitcoin from this top here like we had in 2017 or 2018. Because that time we had an incredible bull run, huge FOMO, a parabola, and things like this, and that's why it makes sense from this huge hype to the very bearish sentiment. This time we are already very bearish. We can see this in the fear and greed index and things like this. We are already very bearish. So yeah, I don't see an 85% drop or something like this. This would be like, yeah, below 10,000 or so. Yeah, that's when we would be in trouble. But we haven't seen this big blow off top so far. So, I mean, if we go to 100 or 200,000, I think this is more likely than an 85% drop. But from these levels, I don't see it. I see the lowest point right now at 22,000 if this bear market here plays out. But yeah, people are already so bearish. I'm not sure how bearish we can get. Yeah, the fear and greed index is at 10. Again, in 2018, we weren't at 10 most of the time, only on the deepest levels of the bear market here. So yeah, we are now at the same levels here on the fear and greed. Of course, there's nothing for certain. Everything can happen. But yeah, I think that's why we're discussing here. And I think the ribbons are more useful on the daily to spot these resistance levels where we are right now in the downtrend. And yeah, that's going to be interesting when we can break this. Maybe we get another leg down, and yeah, hopefully recover from there in a V-shaped form. Okay, guys, so that's it for today. I think that's also some interesting indicators. Yeah, hope you like it, and yeah, see you in the next one. Auf Wiedersehen.